Hi, Roger Balzer here. Welcome to our 2 Minute Tuesday for June 7th of 2022. Our title for this week is No Hurricane Yet. JP Morgan CEO Jamie Dimon caused a stir lately when he talked about a hurricane hitting the US economy. Eventually, he may be right, but right now it's way too early. The employment report for May confirmed that the US economy is continuing to grow. Both major measures of jobs went up in May. Non-farm payrolls rose 390,000, while civilian employment increased 321,000. Total hours worked expanded by 0.3%. Has a recession already started? Not so fast, not yet. Notably, there is some evidence of a transition in the economy away from goods and towards services. We've heard this line before. Retail payrolls are still up from where they were pre-COVID, but dropped 61,000 in May. With the exception of the initial onset of COVID-related lockdowns in 2020, that's the steepest drop for any month since 2009. Meanwhile, jobs in leisure and hospitality, well, they increased 84,000, the 17th consecutive monthly gain. In turn, this fits with the recent activity on the stock market, where companies that specialize in retail goods have suffered relative to those like theaters and airlines, which provide services. More people want to be out and about getting back to normal. The worst part of the jobs report was for wages, where average hourly earnings rose 0.3%. In a normal economy, a 0.3% gain would be perfectly fine. But with consumer prices up an estimated 0.7% in May alone, that's no good for workers. The funny part is that all the politicians are trying to take credit for the job growth. The president says he's created about 600,000 new manufacturing jobs. It's true. That's nearly how much the manufacturing jobs are up since 2021 of January, but the total manufacturing jobs are still 17,000 below pre-COVID peak. Politicians want to take credit for good news and blame others for bad news. We're forced to take the data at face value with no political point of view. The economy is still climbing out of the COVID lockdown hole. Jobs are going to continue to grow in 2022 despite the Fed raising interest rates. In spite of this problem, consumer cash flows and balance sheets are healthy. The financial obligations ratio finished 2021 at 14%. That's the share of consumers' after-tax incomes they need to use on debt obligations like mortgage payments, car loans, etc., as well as recurring payments such as property taxes, homeowners insurance, and car lease payments. Put that in perspective, from 1980, when the data started, to the end of 2019, ratio is never lower than 14.7%. Meanwhile, household net worth finished last year at more than 8 times annual after-tax income, highest ratio on record. Americans had 1.2 trillion in checkable deposits in currency before COVID. At year-end 2021, they had 4.1 trillion. Bottom line is that loose money from the Federal Reserve has inflated everything. Moreover, monetary policy remains loose, and the lag between loose money and the economy is long and viable. Put it all together, it means some sort of hurricane's on the radar, but it isn't very close yet. We really will never know when it hits. We will have an idea beforehand, but right now the hurricane is not here. This is not a 2008, 2009 episode or a 1999, 2000 episode or a 1987 episode. Stick with us. We're going to guide you through this pullback that's happening in the market right now and the stuff that all these damn politicians continue to do just so they get reelected. We need to clean house. That means both sides, Republicans and Democrats, both need to be replaced and they need to go. We need to get back to getting America strong again and back on the world stage to be in the military power and economic power that we have always been. Once again, this is Roger Balzer, Balzer Wealth Management. Please let me know your opinions, both positive and negative. Get in touch with me at 440-610-3012 or shoot me an email, roger@balzerwealth.com. Until then, make it a great day.